On June 24th, one of China's biggest banks made a quiet announcement. The Industrial and Commercial Bank of China is closing paper gold trading. Starting July 24th, regular Chinese citizens lose access completely. And this bank is not acting alone here. Postal Savings Bank of China did it first. Then Ping An Bank followed right behind them. Then China Guangfa Bank announced the same thing in June. One after another, major banks are pulling the plug. The official story is that they're protecting everyday investors. Gold hit an all-time high back in January this year. Then it crashed nearly 30% from that peak. So banks raised margin requirements to 140%. That's the highest requirement this industry has ever seen. Basically, you now need more money than the trade is worth. That sounds responsible on the surface, right? Protect citizens from a wild and risky market? But look closer at exactly what's being shut down here. They're not banning gold itself, not even close. You can still walk in and buy real physical gold. What they're banning is leveraged paper contracts, the bets, the speculation, the gambling on price. So why would a government go after just the gambling? Here's a theory that connects every piece of this puzzle.
The real price of gold may be far higher than today's price. And the reason is something called paper gold. Let me explain this in the simplest way possible. Imagine I own one rare original painting in my house. It's real, it's one of a kind, and it's locked in my safe. Now imagine I write 10 certificates, each one saying, you own this painting. I sell all 10 certificates to 10 different people. Nobody ever shows up to actually collect the painting, so everyone just trades the paper instead of the real thing. On paper, the market now thinks 10 paintings exist. In reality, there is still only one painting in the safe. That's exactly how a lot of gold trading works today. In London and in New York, most gold trades are paper claims. Almost nobody asks for the actual physical metal. And just like the painting example, more paper gets written than gold exists. Nobody knows exactly how much paper is out there, but most experts agree it's way more than the real supply. And when paper supply looks huge, the price gets pushed down. That's the basic idea behind suppressing an asset's price. Now here's how we'd actually spot if this were true. First, we'd see a gap between physical price and paper price. We actually saw this happen in the silver market this year. At one point, physical silver traded 40% above paper silver. That gap shows people trust the real thing more than the paper. Second, we'd see smart money buying physical and dumping paper.
And that is exactly what central banks have been doing. In the first 3 months of this year alone, central banks bought 244 tons of gold. That's the strongest first quarter ever recorded in history. They've now bought over 200 tons in 10 of the last 11 quarters. And a lot of this buying was never even officially recorded. The World Gold Council says real numbers may be far higher. Some estimates say the hidden buying could be 10 times bigger. So what are these central banks selling to buy all this gold? The answer is U.S. Treasury bonds, America's government debt. For 50 years, the standard move was simple and predictable. Countries took extra dollars and parked them in U.S. Treasuries. It was considered the safest trade on the entire planet. But that pattern has been quietly reversing for over a decade. China alone has dumped hundreds of billions in U.S. debt, and they've rotated that money straight into physical gold. On paper, that trade makes zero financial sense at all. Gold pays you nothing, while bonds pay regular interest. You'd only make that trade if you stopped trusting the bonds. After years of endless wars funded by money printed from nothing, many countries simply stopped trusting the dollar's promise. They started wanting something nobody can simply print more of. And that brings us to China's real master plan here. China isn't just buying gold, they're building a new system, a brand new gold trading hub between Shanghai and Hong Kong.
Shanghai will set the price based on real physical delivery. No paper games. Actual metal has to move hands there. Hong Kong is expanding its gold vault capacity by 10 times over, from around 200 tons up to over 2,000 tons of storage. You don't build a vault that size for paper contracts. You build it when you're planning to settle in real metal. The goal is simple. Tie the Chinese yuan to gold's trust, not an official gold standard, but something close to it. So now the obvious question becomes, what does America do? Here's a wild fact that sounds fake, but is completely real. The US government values its gold at $42 an ounce. That price was set by law back in 1973 and never updated. Gold today trades at roughly $4,000 an ounce. That means there's hundreds of billions, maybe a trillion, hiding on the books. With one simple decision, the Treasury could revalue that gold. Suddenly, over $1 trillion in value appears overnight. The Federal Reserve has actually published research on this exact idea. There's also a real proposal for a gold-backed Treasury bond, one that could be redeemed in either dollars or physical gold. If that happens, it would be America's answer to China's move. Both sides reaching for this same ancient anchor, real gold.
So here's the bigger picture you need to understand right now. This isn't really a story about one bank in China. It's the early stage of a battle over what counts as money. For 50 years, the dollar ruled because the world trusted it completely. That trust is being tested in ways we haven't seen in decades. Whether gold goes up or the dollar simply goes down, the end result for your money could look very similar. Keep watching how this story unfolds in the months ahead, because the rules of money itself may be quietly changing.